Hey, how are you? My name is DiMarco, and this is Conquering Crypto. Today, we're going to go over the basics of technical analysis. Um, Now, to go over the basics, we're looking at things like learning time frames, learning to recognize candles, um, things like moving averages, the trend lines themselves, and patterns in price movement. But if you can really get a hold of these basics, you can find all kinds of different patterns in price movement, and you can also be a successful trader. I've been trading now for about a decade, and I've been full time for a while now. And one of the things that changed my perception of how well I did was learning to chart. I have about 10 different charting books, and I've been charting now for quite some time. And it's one thing I really enjoy doing. And I'm going to show you some of that stuff today, some things that I found helpful. And especially, this is for my Conquering Crypto members. I run a site called Conquering Crypto on Facebook. You are more than welcome to join. Find it on Facebook, invite yourself in, and we will approve you. I also have a trading view called Conquering Crypto. I have a Twitter, DeMarco underscore Danny. We have a TikTok, Conquering Crypto, and we have a few other things. Basically, anything Conquering Crypto, you can find us. We have a great Discord. Our Discord is free. Join us. We have NFTs, crypto, and stocks. We have a lot of smart people in there doing a lot of stuff, but that's it for now. Let's start some technical analysis. So, the first thing that I want to explain are micro and macro time frames. Now, when you get to chart a security, so let's take Tesla. Let's go check out Tesla. All right, so when you take a security like Tesla, let's empty out the screen. Okay, let's actually, you know what? Let's find a new Tesla for you guys. So we're going to look at the Tesla. That will do. Okay. So, let's go all the way out. So we have a brand new chart in front of us. Okay, this is Tesla. Now, the first thing I want to explain is time frames. So at the you want to use the either the app or the desktop version of TradingView. TradingView has some of the best uh, programs and just tools that they give you. TradingView by far is the best I've ever used when it comes to charting. Um, I personally use several different time frames, but you want to have two primarily. Okay, so you want to have a micro and a macro. So what do I mean by that? So for me, the macro, if you can imagine, everything you're looking at in the chart is the same information. Okay, but if you can imagine that you're looking from something close to far away, that's what you're doing with the chart. Okay, going from the day to the 30 minute. Do you understand? What's happening is you're taking the same information and you're either putting a magnifying glass on it or you're zooming out and going far, but it's all the same information. So you want two primary areas. That's what I usually recommend. And those areas, for me anyway, are the day and the 6 hour. That's my macro. That's so I can get a hold of the security from a far away outside view to see what's going on in the entire security. So, example for Tesla, I can see that on this chart, it started in 2017. Do you see at the bottom where it says May 17th? TradingView keeps track of all of its dates with its price points, which is fantastic. And then we got a whole lot of movement starting after, we'll say, January of 2020. And we got all this price movement going on here. And of course, Tesla is one of those strong stocks. It's been doing very well. So we are going to check out the time frames. This is the day. We can get a little bit closer with the 6 hour, but I would still consider this my macro. Again, we're a little bit closer, but we are really looking at Tesla as a whole. So what I like is then I like to go closer. I need two different versions of the exact same chart that I'm looking at in order for me to get an actual hold on what I'm looking at. So then from the macro, we go to the micro. The micro for me is the 1 hour, 30 minute, and 5 minute. This is what it looks like in the hour. Now you can see we're a lot closer, right? So of course, price starts to spread out a little bit instead of being so bunched up like it was before on the macro, because then everything zooms out. So now in the micro is when we can look for things like patterns. We can look for things like candle confirmations. That's the kind of stuff that is important to learn if you are going to try and day trade at all. And remember, anybody can be an investor. This is for scalpers. This is for swing traders. This is for day traders, for those three types. Investments is years. Swing trading is months to years, weeks, months, years. Day trading is days, weeks, months, and scalping is minutes, hours, days. So those are the time frames for those different types of investing and trading. Okay, so now that we're in the micro, so we have the hour, and then we have the 30 minute, and I even go all the way down to the 5 minute and even the 1 minute if I am scalping, so I can find minute details in the graphing that can help me be more successful in my trades. I am a full-time trader. This is what I do full-time. This is basically my job, and what I do all day is I find patterns in the charts, I trade the pattern, and if I'm successful, I profit, and that's what I typically do all day long. So for me, it's pretty important that I get this stuff as right as humanly possible. We're not going to go over actual trading today. We're going to go over setups today. So we just went over the time frames. The next thing I want to go over is the candles themselves. So there are all different types of candles. Why don't we find some? Nothing like typing in candles and brings up regular candles. All right, so let's have a look. Apparently, this is like a cheat sheet, what it looks like. Great. Sorry, I hope I'm not blinding you guys. I know it gets bright when the white screen comes on. And I'm going to move this. Why don't I move this over here a little bit for you guys? There we go. So as you can see, we have all different types of candlesticks. Okay, you have your neutral, bearish, and bullish and bearish. I usually actually keep this kind of thing handy with me. I have several different books that I keep with me as I'm trading, just in case I have a question. I have been going over this stuff for a long time, but that doesn't mean that I don't keep the stuff with me just in case. You want to try to find your patterns based on what you want in the market. If you're trying to scalp, you want to get in there and you really want to look for specific candle confirmations. What the candle is telling you is as important as price itself, because the candle actually talks to you and gives you information more than you think. Okay, so these are the basics. You've got the body, and you have the wicks. Now, we're not going to go over candles a lot today. I just wanted to show you candles and candle types. It's something you should definitely check out yourself. I actually have another book, I guess it's up there, specifically on candles, and I go over candles as much as I can because the more info you can get from the candles, the better. Let's go back into our trading view. Okay, so now that we've gone over our time frame and we can look at our candles, let's go over trend lines. Now, this is where it starts to get into the actual meat and potatoes of you charting a security. So, for everybody that I teach, because I do coach quite a lot, for everybody that I teach, what I have them do first is we have to come out, and we can still take Tesla for this. We have to come out all the way into the macro. Okay, we're going to pretend like we've never seen this chart before. I know it's Tesla, but we are going to pretend this is a fresh chart so you can get an idea, and you can do this for any chart you want, because once you get the basics down, you really can get a hold on what is happening with your security that you're trying to chart. Okay. Now, the first thing we want to do whenever we are charting a security is find out what kind of trend is the security on. Okay. You have uptrends and downtrends. You also have sideways movement, which is called consolidation. And we will go over some of that today. This would be considered long consolidation right here. Okay. So as you can see, price is just going sideways. For the most time, even if price is going up and down, if it's going sideways, that's called consolidation. And there's nothing wrong with that, but it's hard to trade consolidation. You don't want a sideways market. You want an up and down market, okay? Buy low, sell high. You can't buy low and sell high if it's just going across, right? So the first thing we want to figure out, what kind of trend are we on? Are we on an uptrend? Are we on a downtrend? So I find that out by laying trend lines. It's that simple. So the first thing I usually do, this is a trend line, okay? What you can do is you want to lay these trend lines at the bottom and the top of your price action. So in the beginning, I sound like I'm reading the Bible. In the beginning, you can we can still use this. You can lay a trend line on the bottom here. Okay. So that would be the trend for right now. And of course, it would be consolidation. And that's going to go from January 2017 all the way until about February of 2020. So Tesla wasn't doing a whole heck of a lot. It was just in major consolidation for those times, at least on this chart. I'm not sure what that would be on other charts. We're just going to go by that for now, just because that's what I have in front of me. So now, what else do we see? Well, we have our bottom line, but we also have developed a diagonal line. Where is that? The diagonal line, if you can imagine, because we want to cover as much space as we can on the top and the bottom. So just imagine taking a line. Okay. I'm even going to give this a little bit of an angle. And I am going to push that towards the price action. Once it touches one area, you can stop. Do you see how it touched at the bottom? Okay. After you stop, you want to take the other end until it hits the other side of price action. So I would say for me, that's as far away that I can get for price action after my first touch. We then want to go back to our original point. And there we go. That's it. This would be called an uptrend. Okay. We'll write that. This is an uptrend. And furthermore, this is considered an uptrend. And if we elaborate on that a little bit, this is considered to be an uptrend line. All right. So our uptrend line tells us that the security is above a certain point. And so long as price stays above that trend, you will continue to be in the positive. You will continue to profit so long as it stays above that. Once price breaks this line, now this is not something we're going to go over today, but once price breaks this line, let's say it continues to go up, but then breaks, that is called a reversal. That is called a trend break, which can lead to a reversal, which would then put us in the opposite direction. Okay, we'll go over that as well. I also want to show you that you can then put your lines on top. So there's actually a few things that I see going on. So the same idea, we're going to put our line out and then we're going to drop it, touch, see the touch on the top, touch, and then we readjust our first one. And there we go. So now this would be considered a tunnel. Okay, now there are all types of actual patterns themselves. We're gonna go over that in a minute too. I don't want to make this video really over 30 minutes if I can. And you can of course skip around the video for different types of things that you want to work on personally. But what you're looking for is actual patterns in the price. The more you can get the pattern control, the better you will do in the market. So now I know that I have this tunnel, right? What I want to happen, or what I can tell myself at that point, is that hopefully price is then going to continue in this tunnel. That is one way that you can track it. Okay, you want price to then continue. These lines would be considered to be support and resistance lines. Even though they're diagonal, you can use them like support and resistance lines. I'm going to go over support and resistance later as well, because that's something important that's a part of basics that can give you control of your chart. So we just charted Tesla. It's got this upward tunnel. That's pretty much it when it comes to the basics. Let's go and let's chart another one, a fresh one. So let's find something else. Why don't we try something with more time? So let's try Microsoft. Okay. Now this chart should look a little bit different. I'm trying to find something with more price action. Let's get one of these. There we go. Binance coin. Now you see how this has more up and down price action. Let's get a hold of where we're at and what we can do with BNB. Let me get rid of some of this stuff here. All right. So what do we see with BNB? Again, what is the first thing that we want to do? As always, we want to figure out whether BNB, this is a crypto, by the way, this is Binance coin BNB. We want to figure out if we're on an uptrend, a downtrend, or we're in kind of consolidation. And on this one, we're in a little bit of both. You can put charts on top of charts on top of charts. I like to stack as much information as possible on my charts, and then whichever it seems to be going, I will adjust my charts to how price is moving, because there might be information in one area that's not in another. So if you put it all out there, you can then essentially move as the market moves. So let's check our first thing. First thing we do, let's put out our line first. Okay, so this would be considered all consolidation. Okay, so for a long time, all this sideways movement, again, is considered to be consolidation. Consolidation is something that has to happen. It's when nobody is winning. The price grab, it's just basic up and down. In this case, it's a lot tighter. So what then happened? So we then developed, this is called a pump, and this is called bullish. Bull and bear, I'm sure of terms you've heard of. Bull means up. Bear means down, essentially. Okay. The way I remember that, and the way that I initially heard someone say it, is bulls and their horns, when they attack up. Bears with their paws and claws, they swipe down. That's how I remember that. So if we got rid of all of this right here, okay, which we can actually do, if we got rid of all of that, what would happen is we would then say we are on an uptrend. That would just be a solid uptrend. We're on our way up. We could also then chart that just like we did for Tesla. And look what we have. We have another upward tunnel where what we want to happen, essentially what we want to happen, is we then want to see price bounce around the inside of that tunnel. That is what we want to happen, but that is more than likely, with a lot of the stuff, not going to happen. So what do? Let's play out what would happen in real time. So let's say you and I have just charted this together. We notice our tunnel. Okay, we're going to play this. Now we're still in the pattern. I'm going to actually adjust this a little bit. So now we're actually developing, because price is staying in the center. This is more of a wedge pattern. The wedges aren't quite triangles, but they're not tunnels. They have, it's kind of an in-between. So you have your triangle, which is of course a triangle. Then you have your wedge, which opens up a little bit. And then you have your tunnel, which kind of has parallel lines. So this really isn't parallel. In other words, the points will eventually touch. So we're going to call this a wedge, because it's not exactly a triangle, not a tunnel, so it's a wedge. Let's let Price continue. Now, again, this is on the day chart. There we go. So we just had our first pierce from price movement. Okay. This would be considered what could be the possibility for a trend reversal. Okay. Let's continue. So what I typically do is you can set alarms. Having alarms set is one of the most important things you can do as a trader. I don't think people realize how important alarms are, but alarms wake me up because I do trade crypto, I trade Forex, I trade stocks, I trade so many different types of things. I have alarms set on over 50 to 60 securities that if they hit a certain price, they will wake me up when I'm sleeping. They will tell me when I'm at the gym, at the supermarket. It attaches to my watch. It's very important for me to find certain prices. Let's say I had an alarm set right there, okay, at the 600 mark. And I was just alerted that price is now possibly falling out of my wedge. Let's continue. Now the candles are talking. The candles are actually telling a story. Okay. What the story is telling me right now is, look, because of that pierce of the tunnel, the story based on the candles and the patterns is telling me that price is no longer headed in a bullish direction. This is very important because you can trade trend lines alone. In other words, if you start to buy down here, price continues up your wedge or your tunnel or your pattern, you can then sell when you realize that price is going the other way. Okay, because then you can always buy back in lower. So what you're looking for are these little confirmation points, and you can trade the trends alone. And that's it. That's why I say if you get this pattern stuff down, you can profit on that alone based on how you're following the chart. Okay. And it can happen over days or years, months, whatever you have set up, because all traders are different. All traders see something different. Technical analysis is subjective. Okay. Everybody sees something different. And that's why I formed my group, Conquering Crypto, because I like all these different opinions on the same chart, because the more information you get, the better you can control it. So now, boom, this is called a break reversal. We had a break. There's our reversal. We're going to let the pattern continue. Price is moving. This is considered to be consolidation. See this tight movement here? Okay, great. So now I'm going to teach you guys a little bit something different. So when you're dealing with consolidation, you have two of the most important things that exist in technical analysis, and that is called support and resistance. Now remember, we are still on the day. I'm showing you guys this in a macro sense, but of course we could go closer into the 30-minute or hour or 2-hour, whatever, and get closer, and we can be more critical close. But for now, we're just using a macro because we're just doing the basics. So now this is one of the most important things I'm going to explain to you. They are called support and resistance. Support is the bottom of price action. So what do I mean by that? This right now, this little area, because of these wicks, we're not going to use the wicks for right now. You can use the wicks, or you can have multiple supports, and that is when you develop a support area. I'm not going to go over that today, but we're going to say that that level right there, that we just, that horizontal line, that is going to be our support, okay? So then we have to ask ourselves, well, we have our support, our bottom. Where is our top? Well, we now have two touches on the top. Can you see them? We have this guy here, and we also have this little beginning, these wicks. What I'm going to do is we're going to draw a line across. And guess what we have? We have a parallel horizontal tunnel. In this parallel horizontal tunnel, resistance is on top, support is on the bottom. These are the two extremely important things you have to learn to be able to take control of a security. So we have just developed, this is what we've learned. We've learned about sideways consolidation. We've learned about finding an uptrend and a downtrend. And we've learned about consolidation, and we've also learned about support and resistance. We've also learned about breaks and reversals. This is all a part of tracking price. As a trader, you want to be able to track price because the market is incredibly chaotic. Okay. The only way that I have found, at least for me personally, I'm sure there's other ways, but the best way, I should say, for me to get a hold of the chaos in the market is through the charts, because then I can see where price is at, what's happening. Let's continue. So now we have our tunnel. We have a solid support bottom. We have a solid resistance top. Let's see what happens. Boom, stop. So from our because remember, this is a full day, okay, that we're charting. This is a full day. So you would be monitoring this for a whole day. Then once it breaks out of your tunnel, okay, that means that resistance has been pierced. We can move our resistance line up. These wicks over here give us an idea too. You can bend this, you can turn this diagonal, but in this case, we're just going to keep it horizontal. So now our consolidation area has widened, but we're still in this, we're still tracking the same thing. Okay. In other words, we haven't had a pump or a dump or a fall or a rise. All we have is still just sideways movement inside. All that's happened is our tunnel, our consolidation tunnel, has widened. Let's continue. Price is continuing. This is a day. So every tick is a day. So you would be monitoring this day by day. You could have alarms set based on where price might be going. You can also scalp this by placing trades on the bottom or the top. Now we're getting close to our support line. Let's see what happens. Aha! So I want to back up for a second. I want to get closer to this. What just happened? This is the reason why support and resistance and finding these points is so critical. What just happened, if we extend our support, is we just had a touch occur on our support line and it bounced off of that support line. Why is that important? Because then we know that our consolidation tunnel is continuing. And we also know, which is more important for scalpers, that this bounce could prove to be important. You can trade these bounces alone. I do that all day. So what you would do is you would then place a trade here. Let's watch and let's see if I would have won if I placed the trade there. So I would have placed the trade there. Now look, but it's going up, right? I don't know if it's going to stay up, but I would stay in the trade because I haven't lost anything. Price action is still going sideways. Because we have that bounce, though, we know we've already touched once. So even if we touched it again, we would be even with our order, right? Because we would be in the same area. So we're still up a little bit, but the important thing is we haven't gone under that line. So the trade that you're doing is still a good trade for right now. Let's see. I can't remember if it falls or goes up or what. Okay, a lot of sideways movement. I know at some point that something, it breaks out of the pattern or something. Why don't, since we're all the way over here, we're going to remove our resistance line down. Now, this is our tunnel that we are currently in. Okay, this is kind of a whole area of support. You can choose and decide based on what you see between solid body candles and wicks. You can choose and, you know, kind of play around. It's not exact. There is no way that technical analysis is an exact science in any kind of way, shape, or form. Let's continue. So again, if I opened a trade here, I am now still profiting. We are so far up from my initial trade. But we have not broken out of the pattern, which means this is consolidation. This whole thing, however long it goes, I don't know how long it goes. I thought there would be more price action from now. I thought that's what I saw. But for right now, we're going to just follow this. We're going to go back to the day. So we were just in the 6 hour. We're going to go back to the day. Now remember, we placed our trade down here. Look at how well we're doing. Oh, well, now you see, now we're coming back down. And again, what happened? We did not go below our support area here. Okay. So price, we are still good. We are still in this tunnel. Let's continue. Now you could have placed another order here, or you could have purchased more after you saw a bounce, because you know if it's going to bounce, that it's going to continue up, right? Now we're getting somewhere. Now we're getting to the top of our long consolidation tunnel. This tunnel is from May to August. So this is a couple months long going on right now. We're getting now close to the top. So the top is resistance. Here we are. We've met and just pierced resistance for the first time in months on this chart. And there we go. This is now called a breakout. Breakouts are very important to scalpers, and they should be important to all kinds of traders, actually, because now they can see that there is a potential for price to reach new heights. If this were to flip and be the opposite way, it would be price hitting new lows. Let's check this out. Now, if you're a scalper, you can actually place a trade right here and hope that it continues up. But we have these two orders. Remember, we placed these two because they bounced on the bottom. What you would do now is, based on how you have a setup, now you would sell. A lot of new traders have difficulty of asking themselves, when do I sell? Well, in this scenario, you would have sold at the top. Let's continue. Now, as you can see, we have developed a new trend. So we have developed this new uptrend. Okay, we now have an uptrend. And the reason we have an actual trend is because we broke out of our pattern. We broke out of this tunnel. So now we can say, okay, we have this trend forming. Let's continue. Now we did just get back into the tunnel. So what happens at this point is a few things. If you placed an order here, if you didn't sell and you placed a new order, you can either get out here, or you can just, what we can do, we can now say that is our new resistance area. Since it broke back into the pattern, all that happens is now the consolidation tunnel gets bigger, since we are back into the pattern. So that uptrend, look, the uptrend that we also are on was broken, just like the other one was. What does that mean? It means that maybe price has now headed the other way. This kind of stuff is important to find. Let's continue. So now we have a wider area to explore when it comes to the pattern, the tunnel pattern itself. Price is continuing. We're getting back up now, closer to the top of our resistance line. Oh, wow, look at that. So, so we had a candle come all the way down. Look at how big that wick is. This is a wick, meaning price came all the way down here and touched. You'll notice it touched the support area. Again, that's why finding the support and resistance is so important, because look, came down, touched. I don't know what's going to happen. Let's continue. Oh, came down, touched, went all the way right back up. And now we just had This would kind of be considered a breakout. There are breakouts and there are fake outs. This could be a fake out. If you'll notice, let's get closer. If you'll notice, price broke our resistance area, but it's falling back into the pattern. The breakout is a breakout. When it comes back into the previous pattern from the breakout, that's called a fake out. Let's continue. We are now back in our pattern. Now, normally we could actually adjust resistance a little bit, but because we're so close, I'm going to let it play out. All right, so now we can say officially, because we're at that area, what do we have? What happened, guys? What do we have? I'm sure somebody out there is paying attention. We have another uptrend that we can officially put on file, put on the chart. This wick must have been something crazy. So something happened October 21st with BNB. Not sure what. I know there was a lot of crazy stuff that happened in October, including SHIB, right? Went nuts. So what do we have? We have another uptrend. Great. So now we can use our uptrend, our resistance line, to now see where price is going to take us in the future. Is it going to go back into the tunnel? Is it going to continue? You could also, if you wanted to, if you're scalping, place a brand new order here to continue up. That's called a breakout. You want to ride breakouts to a certain point. I like 10 to 20% and get out. That's called a scalp. Now we're really talking. So if we placed an order here, let's see how far we would have to go. Now that's already a 20% gain if you placed an order on the breakout. Now, of course, this is over a couple days. I want to say that's almost a week. So in a week, if you had placed an order here, you would have made 20%. And if you wanted to, this could have been the spot when you decided, I'm happy, I'm removing my security, I'm taking my 20% that I profited. That's the kind of stuff that I look for all day long. Let's continue. Now we are still above. Oh, we're getting kind of closer. Oh, this is actually live. This is right now. So what else are we seeing in BNB? Well, we're getting now closer back to our trend line. So our most recent one. So we can back off this resistance. Okay, we can actually get rid of it. And now what can we do? We're in the day already. Now we can develop new patterns. We have an uptrend. We can put a top line on it. We can get rid of our support. Well, then you know what? Let's not get rid of our support in this case in case it falls through. But now you can start to look for new patterns because we're live. So what we want to see happen is we want to see price bounce off of this uptrend and continue up. Okay, that's what we want to happen. But of course, as you've seen in the examples, that doesn't mean it's going to. It could totally do one of these and then right back down. And then if that were to happen, we can develop a new consolidation area where we can track. That's it for now, guys. This video was to give you like just the basics on what I find, what I do all day. There are so many different types of chart patterns. Oh, I want to show you guys this picture before we go. So this is the chart patterns that I recommend everybody that wants to get into this. The most important ones, in my opinion, is the flag, finding a flag, pennants, and triangles. So between consolidation, your triangles, and your flag and pennant, they're, to me, the most important patterns I can find. But as you can see, there's everything. Head and shoulders, double top, double bottom. To me, BTC just did a double bottom, and I actually alerted TradingView just in case it was right. I don't think it was right, but that's why we put that information out there. In case it is right, this is all speculation. That's what trading is. Or I'm sorry, that's not what trading is. That's what charting is. Speculation on top of speculation. We didn't go over moving averages today. We didn't go over indicators. That's going to be something for another video. This is the basics, and I use the basics to win. So can you. You don't have to use indicator on top of indicator. What do I mean by that? So in TradingView, they have all these indicators. Look at all the ones that I have as just favorites. You can use these indicators on your screen. And what happens is you then get an idea. You get other ideas of what the pattern is doing. So this is a moving average indicator up top. It's telling me that price got really strong in an uptrend from here to here. This is the RSI, the relative strength index. The top area means that it's being overbought. The bottom area means that it's being oversold. And you can use that graphing line below with price action to try and predict what kind of pricing is going to happen in the future. I just wanted to show you guys that there's tons of these indicators. We'll look at one more, maybe something that actually goes over top of price itself. So you see now we have this is a zigzag. All of those H's and L's means high, 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 low, low, high, low, low. And that is a whole different way of charting. But of course, it's a very good way of charting, to be perfectly honest. But we went over the basics today. I hope you guys enjoyed. I know this was kind of a long video, but if you're just learning the basics, I hope I gave you guys like a grounded look at how you guys can start. Find your trend first. Use two types: micro time frame, macro time frame. Use them both, close and far. That's basically all micro and macro means, close and far. You want to definitely find your trend. That is the most important thing. From there, you can find your patterns and support and resistance. And after you find all that stuff, you have an official control over your security. From there, you can add indicators. From there, you can add the Fibonacci. From there, you can find divergence. From there, you can find, all kinds of things you can add. But this is the basis, the rock, the foundation. That's it for me, guys. My name is DiMarco. This was Conquering Crypto training videos, how-tos. Hope you guys enjoyed. I know it was a little bit long, but I really do appreciate you guys checking it out. And that's going to be the video for me. There's going to be way more of these coming up in the future. So for now, guys, take care. And I hope you learned a little bit of something today. Bye.